My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramer America. Other people make friends. I'm just trying to make a little money. My job is not just to entertain, but to educate and teach. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. Anybody who thought we could get a debt ceiling deal smoothly without rancor at any time before the very last minute must be a size buyer of the tooth fairy. Or maybe they think the Philadelphia Eagles fans would welcome Cowboy fans with open arms. Yet, that's exactly how the sellers reacted when Republicans this morning walked out of the meeting with Democrats who were supposedly eager to nail down a deal. And it's why we got hit today with the Dow sinking 109 points. That's beat declining 0.14% and the Nasdaq losing 0.24%. Now, after the raucous rally in the Nasdaq driven by everything AI, it was inevitable we get some profit taking on the breakdown of the talks, right? I mean, just sell. And that's exactly what it did. We're just too far away from the debt ceiling deadline to get a deal done. And it doesn't help that the president's literally on the other side of the world in Japan at this very moment. I still believe we'll eventually get a deal here, but only once our leaders feel like there is a true gun to their heads. In 2011, we got a deal, or only when they started worrying that the rating agencies would downgrade our debt, which Standard & Poor's ultimately did anyway. It's why I keep telling Investing Club members to maintain a healthy cash position, because it's just too easy to knock this highly elevated market down in the dumps like it did today. Now, next week is going to be, frankly, no different. We'll come in on Monday with nothing done over the weekend in a sense that the clock is ticking. But the only thing that will actually matter on Monday is the Zoom quarter after the close. Hey, you know what? Something happened to Zoom. During the COVID lockdown, we were Zooming all over the place like crazy, right? But when things opened up, it seems like we all ended up on Microsoft Teams instead. I like the features Zoom has added, including ways to teach people to sell things. But at this point, it doesn't matter because Microsoft has decided to make Teams the default video conferencing application on Windows, and that makes them very hard to beat. Tuesday's more torturous retail, just as we had in the last 5 days. This time it's Lowe's, which should have results similar to Home Depot and be greeted with fresh volatility. But where she stops, nobody knows. I was worried about Dick's Sporting Goods being too high, given that sporting goods has not been a strong category so far this spring for the retailers who've reported. But I should have been more worried because Dick's got banged down $9 today. Maybe that immunizes this well-run company from a big downturn? Several analysts have predicted Williams-Sonoma will have a real weak quarter on Tuesday. Lately, that kind of negative retail story, it works. So don't be surprised if there is, one, a disappointment, and two, that it sends this tremendous retailer stock even lower than it is right now. After the close Tuesday, Toll Brothers reports that this home builder's been a real horse, along with Lennar, D.R. Horton, and Pulte. I expect still one more strong quarter as the housing shortage never seems to abate. We could be short as many as 7 million homes in this country versus demand, and every time the Fed raises rates, all it seems to do is exacerbate the shortage, which then, of course, drives prices up, not down, even though that's exactly the opposite of what they want. Then there's Palo Alto Networks. Now, this is the best of the breed cybersecurity company. We own it for the charitable trust. I've talked about it a lot at our club meeting this week. Palo Alto has been incredibly reliable, even as there are always a couple of analysts who are negative on the story. This time should be no different, although there is a big short position being built up against Nikesh Arora and Palo Alto for when they report. Wednesday is incredibly important because in the morning we get to hear from Kohl's and Analog Devices, and in the evening we hear from NVIDIA, Snowflake, and e.l.f. Beauty. That's eye slips face. I'm very worried about Kohl's. It's been the retailer that can't shoot straight. Could be a very hard quarter, maybe the hardest we've seen of the soft line department stores. On the other hand, Analog Devices, a chip maker that could have an amazing quarter. Why? Because it's focused on semiconductors for industrial end markets, and there the demand has never stopped. Snowflake's not really meant for quarterly reporting. They're building a rent-the-cloud business that should eventually be huge, maybe even take over the whole way that we look at the cloud. But you got to be very patient, and patience is on short supply on Wall Street. Snowflake has run lately because of its association with AI. It's a legitimate connection. If the stock weren't coming in so hot, I tell you to buy it ahead of the quarter. e.l.f. Beauty is amazing. It's one of our junior growth stars. Remember, we just put together that great list of 10 that I'm going to be following all the time. It's taken the cosmetic shelves by storm with its knockoff products. I predict still one more blowout. And then there's my beloved NVIDIA. Many people feel this is the most overhyped and overblown stock in the entire market right now because it's being valued at $773 billion. That is a large market capitalization. But in the end, stocks are valued on their future earnings prospects, right? And given that NVIDIA is the backbone of artificial intelligence, you could argue it has the best prospects of any company in the entire S&P 500. That's what makes it so hard to value. But you know it's not going to be valued conservatively, not in this AI-obsessed market. What do I say, NVIDIA? Like Apple, own it, don't trade it. Next up, is there a stock more hated than Best Buy right now, other than Foot Locker, which we said we have a small position for the Charitable Trust. It's a placeholder. We are interested in finding a level to buy a lot of it because we believe Mary Dillon, but man, was that a bad quarter. Anyway, we keep hearing that nobody's buying anything important for their home because it's already been bought. We'll probably get the same story when Best Buy reports on Thursday. I'm reminded of what we heard on when Sonos reported. Basically, people are full up for stuff for the home. I have to admit that I am a little glad that I am not the terrific CEO, Corey Barry, because it is such a hard job right now. The only hope, hey, maybe Best Buy stock is so heavily shorted that it won't go down even if the quarter's miserable. That's about as good as it gets, so I'm sorry. Now, there's Medtronic. This has been a percolating stock of late. I think they've got a good suite of new medical devices. Now, this stock had been waning in the last couple of years because Medtronic had a couple of backfire quarters. Some say it was because of COVID. People weren't going to the hospital. Now it's on the upswing along with the rest of the group because people are finally getting the non-urgent surgeries that they had to delay during the pandemic. Hey, you want a baby that's being thrown out with a bathwater? Consider this situation. Ralph Lauren. It had a remarkable quarter last time, but now it's being brought down by the overall hatred of apparel. Now, I think Lauren could be a lot more like outlier Tapestry than the other apparel stocks. I'd be a buyer if this one pulls closer to 100 ahead of when it reports. After the close, we hear from Ulta Beauty, and there's been a lot of chatter because of the tougher macro environment. They're going to be hurt. I think Ulta's a premier retailer that should be bought if it breaks down in reaction to a given quarter, or certainly before it even. Why? Because of its loyal rewards program. It's got one of the best rewards programs in the country. Go and download the app. You will not believe how strong it is. Then there's Marvell Tech, which may be close to the end of a string of tough quarters. Marvell's got key products that are actually needed to move AI data, but you hardly ever hear about it. Now, I want to give you something that might seem a little counterintuitive, given the hatred for retail. I want you to think about Costco. I know it won't be a fabulous quarter because the company is in what we call share take mode, meaning they're undercutting the competition on price even more than usual. But once the share is taken, it doesn't go away. It's sticky, very sticky. And that's why you buy Costco now, not a couple quarters from now, when they're coining money from the new share take. Finally, on Friday, there better be a debt deal. Oh, boy, because we can't go into next weekend without a deal because we're too close to the drop-dead day where the Fed doesn't, where the Treasury's going to have to, I don't know, sell oil? What are they going to do? Unlike 2011, where the debt limit was an obscure issue that snuck up on us, this year the debt ceiling debacle is well known. I think it's weighing down the psyche of the whole country. The bottom line, if we do get a debt ceiling deal, it'll certainly move stocks higher, bringing tons of sideline cash back into the market, even if it's earning more than 5% as of now. Yes, stocks will be that attractive. But first, we got to go through this whole process, the agonizing process. So brace yourself and get this. Keep your fingers crossed. Steve in New Hampshire. Steve.
Jim, how the hell are you?
How you been, man? I'm doing real well. Can't wait to get started next week already. Unfortunately, I take those 2 days off. That's what they tell me.
Yeah, I've been enjoying you for decades, back to when you had the street.com.
Oh, man, now that's the, now we're dating ourselves. What's going on?
Anyway, I've been invested in Devon for a while now, and it's been kind of sleepy, and I was wondering, is it going to pick up after we get into Memorial Day, and should I buy, sell, or hold?
We bought Pioneer PXD for the club today. I have to tell you that Pioneer's got a bigger yield and better growth prospects right now than Devon, so PXD is the one you want to be in. Trey in Texas. Trey!
Jim, I was heating up leftover shepherd's pie last night when it dawned on me. I didn't want this to begin with, and I definitely don't want it again. I went to my favorite Italian spot, and let me tell you, there's no flavor fix like Olive Garden breadsticks. Do we buy Darden restaurants here?
That unlimited salad bowl. My daughter and I would go there on Saturdays. Some of the most best memories of my life. I want to own that stock 9 ways to Sunday. I think you're so right about Darden. What a great place. The line is the only problem. Too many people going. That's why I don't want to go there. Can you imagine? Anyway, look, if we do get a debt ceiling deal, it's going to move stocks higher, even though interest rates are high to begin with. But first, we got to get there. On Mad Money tonight, this week we held our monthly meeting for subscribers to the CNBC Investing Club. And we received so many questions from members that we decided to answer some more of them tonight. Don't miss my take on some of your most asked about holdings. Then, closer viewers know that amid the mini banking crisis, there was one name I told you to hold on to. I'm revealing what it should do and why it should do it and why you should own it. And AGCO has a finger on the pulse where our global food supply is. And I'm learning more from the company's top brass. So stay with Cramer.
Don't miss a second of Mad Money. Follow @JimCramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com. Or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.